I'll get right to it.
Vaccinations to get our business community to be proactive just as we are at the state level. In fact, we had a good call with the Chamber of Commerce on this topic this morning. I think the transit commuting reality will be slow to recover, but I think when folks come back and actually participate, it'll be a positive experience.
Phil Murphy there, the New Jersey governor from New York City this morning. Good morning. Alongside Tom Keene, Lisa Brambis, I'm Jonathan Ferro. In around about 25 minutes, we'll get you a number from the ADP. The ADP jobs report just around the corner. Governed into that up 15 on the S&P 500, 41.73. We advanced 0.4%. Yields up about a basis point on a 10-year to 160.32. Euro dollar unchanged at 120.15. GM rallying in the pre-market, up by around about 3%. Out with earnings just moments ago. Unlike Ford, they affirm their forward guidance. The company and Mary Barra saying the following on the chip shortage. Let me bring this quote to you, Tom. Quote, our supply chain and manufacturing teams are maximizing production of high demand and capacity constrained vehicles. Our engineering teams are creating effective alternative solutions, and our sales teams, together with our dealers, are finding creative ways to satisfy customers despite lean inventories.
John, you nailed it 30 seconds ago, maybe 3 minutes ago. I can't remember. To me, it's got a real boilerplate feel to it, and the Weston Bar conversation is going to be way more important. It's not like J.P. Morgan where Diamond's actually saying what's on his mind.
Tom,
I'm sorry.
I agree with you.
It's homogenized.
I agree. Ford's come out and said we're going to have to cut 50% of planned production in the second quarter. Let's put some numbers on it. I do think that this headline, though, helps the stock, that we're prioritizing full-size pickups, full-size SUVs and EVs for chip supply, and this won't damage EV growth. Remember, it's the EV story that has really delivered some big gains, helped deliver some big gains outside of the reopening for the likes of GM and for Ford too.
Yeah, absolutely. We'll have to see where that goes. Futures up 15, Dow futures up 72. The VIX comes in almost a figure 18.63. David Wilson joins us right now, looking at a chart, and particularly looking at a chart not on Apple, boring, Amazon, boring software. David, what do you have?
Well, I mean, this is an industry group that's really taken a bit of a hit lately, at least in relative terms.
Crushed.
And Jonathan Krinsky over at Baycrest Partners sort of highlighted it yesterday. He was focusing in on an exchange-traded fund with the ticker IGV that tracks something called the S&P North American Expanded Technology Software Index. Now, I know that's a mouthful, but we're talking about companies on both sides of the U.S. and the Canadian border that focus on system software, application software, and home entertainment programs. So when you put it all together, you know, this is a group that peaked relative to the S&P 500 back in December, if you're looking at the underlying index. And since then, it's been down 16%. So in Krinsky's view, we're talking about a relative breakdown here. So, you know, it goes to show you, I mean, software stocks have certainly been, you know, among the best performers for some time as technology has done relatively well. I mean, it's a bit of a different story this year when you look at the 11 main industry groups in the S&P 500. You see technology, you know, toward the back of the pack here. Ahead of consumer staples, we're pretty much behind everybody else.
Day to day in the grind, that's David Wilson. Are these tech companies linked to the big tech names, or are they two separate worlds?
Well, I mean, there's sort of a one and the other element to it. There's no doubt the big tech companies lately have been setting the tone. But you take an example from late yesterday, McAfee, the security software maker, which just became really an independent company a few months back. They came out with their first set of quarterly results. They didn't go over well. The shares were down as much as 6.5% late yesterday. Haven't seen any trading today. It's definitely going to be one to watch, though. And that's sort of consistent with some of the concern we've seen, particularly in software stocks.
I mean, I look at this, John Farrow, and this is this raging tech battle as we look at general strategists like John Golub and other, maybe Mr. Cooperman's coming on, who I believe is a little more cautious, to say the least, and these are the nuances amid that huge divide.
Well, let's take the Golub price target over at Credit Suisse right now. Lisa, 4,600 on the S&P 500. Can you get there without the participation of big tech? And I think a lot of people would struggle with that idea.
I think a lot of people would say that you could have participation, but perhaps they would lag behind, right? There still would be, John, this cyclical push to the entire market, even if tech perhaps isn't at the forefront.
Well, let's talk about a cyclical push right now and go to the numbers out of GM. We keep going back to this, and I know I sound like a broken record, so forgive me. This quarter, huge demand. There's huge demand in this economy right now. It's about whether you can meet that with supply. And we saw the difficulties from Caterpillar last week, warning about that for the year ahead. We saw that from Ford as well. You don't see that in GM in a big way this morning. The stock's up by 3.3% before we catch up with Mary Barra in about an hour from now. But here's an interesting line, Tom, just on the inventories. 335,000 vehicles over at GM. Almost half the 668,000 of a year ago. That coming from our Detroit bureau chief, David Welch, there on that particular stat, Tom. Now, that's important. These companies are starting to run lean of inventories and running lean quickly.
Very, very quickly, David Wilson. I mean, you've covered this for Bloomberg for decades here. This General Motors it's not Elmer Sloan's General Motors of 1926 or even what you and I knew 30 years ago.
Well, I mean, with this wholesale transition to electric vehicles, that's certainly
They're really
true.
doing it, aren't they? I mean, that's the heart of the matter.
Well, they kind of have to. I mean, Tesla's really kind of laid out what happens if you move into that area. And we've seen a whole lot of companies go there as well. I mean, Ford, Volkswagen, plenty more.
David Wilson, thanks so much. Greatly appreciate that this morning. John Farrow, I look at the Mari Barra thing, and, you know, again, I go back to a hugely homogenized press statement, and it's going to be interesting to get some color on it.
Lisa, I want detail. I think Tom wants detail. I think we want detail on what Ford has done and what Ford has got damaged by, got hit by. What's GM doing that's helped them avoid it?
I want to bring this detail. The idea that net sales and revenue actually missed expectations. That net sales and revenue, $32.47 billion versus the estimate of $32.77 billion. I'm trying to square that with earnings per share. What was the reason for their actually operating either more leanly or making more profit per vehicle, John? And this really is a question as people are able to raise prices on everything and anything related to a car due to the shortages.
First quarter earnings were a blowout. The stock's up by 3.5%. I think we're all on the same page here. A lot of questions for the leader of General Motors in about an hour from now, Tom, when we catch up with the chairman and CEO. What is GM doing that Ford hasn't been able to do? And it keeps coming back to that E word, it's execution. And that's what we've all been grappling with over the last 6 months in this market. It was almost a simple trade. You picked a sector, you picked a factor, you picked a style, and now it's within those sectors where things get a little more nuanced. And we saw that last week with Pinterest and Netflix, with arguably some payback for the pull forward. We didn't see that with Alphabet and Facebook. What are we seeing this morning in the auto sector? Something we didn't see with Ford, we're seeing with GM.
Well, yeah, and we're seeing what Andrew Slyman said yesterday, which is an 11% miss on earnings guesstimate. Chris Verone publishes a chart guy moments ago at Strategas, and he makes clear, John, the bark is worse than the bite out of yesterday. You and I were going back and forth on that after the surveillance nap, and, you know, the bounce back was tangible.
The bounce back was tangible this morning. Futures up.
No, I meant the markets, not the nap.
Nasdaq up by 0.6%.
Nuanced. It's nuanced.
Is it Nuanced Wednesday?
No, I think it's, what is it? Sleepy Wednesday?
No,
what is it?
It was going to be
Snooze Fest. Snooze Fest Wednesday. Yeah, it was a nuanced Monday.
It won't be in a couple of minutes when Leon Cooperman joins us, the Amiga Family Office Chairman and CEO. We'll catch up with him shortly. Equity futures up 0.4%. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance with your market up 0.4%. Your bond market yields higher by a basis point at 160.67 and euro dollar 120.11. This is Bloomberg.
All right, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France, they mainly in the ponds. Good morning. You know what I just realized? Today I'm starting my MIT course on cryptocurrencies. Oh, wee. It is going to be great. Cool. Or should I say great? It's great. Cool. So maybe I'll learn a thing or two. Very open-minded. Not too old to learn something new. All right. Sound is okay and very nice. Muy bien. All right, welcome to Forex.Today, the YouTube community of more than 18,000 foreign exchange traders. We're gathering around as a group. You might be from there, and I'm here, and the other person's over yonder, and we're all gathering in the same place at the same time for the same reason. Let's plan out our trades in advance. So let's go.
Before, we would have to see several years of labor market recovery to see that participation recover. I think there's unique factors here that...
Sorry about that. Bloomberg Television. Bloomberg.com. I guess I have to promote that now that it just ran. Anyways, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. Jumbo, Ohio. My name is Wayne McDonald. I'm a currency trader. I'm also the chief market strategist for TradersWay.com. Hey, if you need a broker, they've earned my loyalty and respect. TradersWay.com. Open up a demo. You want an MT4? Good. Got it. You want an MT5? Good. You got it. You want a fixed spread account for scalping? You got it. You want variable accounts because you want goods? You want to save money? Variable spread. If you instead don't want to pay spreads, you'd rather have just pay a commission, well, try an ECN account. It's your way at Traders Way with Traders Wayne. The raison d'etre of us gathering here as a community every single day is to plan our trades. Plan our trades. So you have to do some reasonable research to have forward guidance, aka a bias. Do you think things are going to go up or do you think things are going to go down? Think of it on the long run. How about between now and the end of the year? Or medium run between now and July 4th? Up, down, or sideways. You have to make a decision, ideally off of research. Then the next thing is then you use technical analysis to say, is this a good time and a good price for me to enter a trade? Buddha says, I need the templates. The link is in the description below. If you need my chart templates, the link is in the description below. If you want to join my trading groups, the links are in the description below. If you want access to my book, Strategic and Tactical Forex Trading, the link is in the description below. If you want to link to TradersWay.com and get yourself a trading account with a trustworthy broker, the link is in the description below. So, hey, the link is in the description below. Very cool. So yes, we gather to plan our trades in advance. You start with a fundamental bias, and then you use technical analysis to confirm or deny whether this is a good time and price to execute a trade plan. So you might be a bull. You open up your charts and you look at them, and technical analysis says, hey, the market's bearish. Then maybe you should just back off and wait. Simple enough. Although most people can't do it. Simple enough. Hey, the market's bearish, but you're a bull. Well, I want to throw down a whole bunch of trades. Whoa. Imagine this. Just imagine this. Let's start the day off like this. What if you said you were a bull and all you did were buy dips in a bullish market? And you're like, well, Wayne, that's obvious. Then why don't you do it? So now you would use technical analysis right? And you'd open up a chart and you'd say, is the market trending up, down, or sideways? If it's sideways or down, you don't do anything today. And you're like, well, Wayne, I would only be buying when the market is up, and I'd only be buying dips. It wouldn't happen a lot. And I'm like, yeah, maybe 2/3 of the time you don't do anything, but 1/3 of the time you almost always make money. You're like, no, I don't want to do that. Okay, now. So I haven't done it for a while, but I used to read profiles at the back of Barron's magazine, and the profiles were of professional traders. And one of the things I loved about doing that is to show y'all, let's say retail traders, aka people in my group, and I'd say, hey, check this out. These guys manage $1 billion. They probably make $20 million a year each, which is enough to live on in the United States. And they do something once or twice a year. Let me repeat that. They might rebalance their portfolio every quarter, but they gather and they ponder and they put all their research and all their thought processes together, and they decide once or twice a year to buy a stock. And because of this amazing work ethic, they personally take home $20 million a year. And I say, think of the mansions, and think of the sports cars, and think of the fast boats and the country club lifestyle. You wake up in the morning and you drink a bottle of Dom Perignon in your hot tub while smoking a cigar and listening to Cuban jazz. That's how you start your day. And here's what you do the rest of the day. Nothing. Maybe you meet with your clients and all that kind of stuff. And you go golfing with your clients, and you go yachting with your clients, and you hang out at the country club with your clients. And like I said, 2 or 3 times a year, you decide to actually do something. Meanwhile, a retail trader says, I'm a bull, but I want to buy a falling market. Even though it's bearish, I just need to do something today because I need to feel good about myself. And yet there's other people making $20 million a year, and today they're not doing anything. Yesterday they're not doing anything, and tomorrow they're probably not doing anything. Okay? So what they're actually doing is waiting for a trade to set up. That's all. I just want you to think differently. Like, you don't get paid by the hour. And maybe that's what it is. If you're like most people, let's say 99% of people in the world, maybe as a kid you had a job and you got paid to do your job, whether it's babysitting or working at hockey games or delivering newspapers or working at the corner store or whatever, and you got paid for your time. So now you want to be a rich, powerful hedge fund manager, but you still think like you need to be doing something every single hour of the day to earn your wage. And of course, that's dumb. You don't get paid by the hour. You get paid to make a profit. Okay? Coolio, right? Coolio. So just, hey, food for thought, yo. Food for thought. Anyways, let's go back to this yen setup. And we said, maybe here or a little higher. Why here? Well, I see the 21.4, but you can also just mark this up as resistance. So very interesting. Maybe, just maybe, eh? Just maybe, eh? We get some yen weakness. I'd like to see some dollar weakness show up. Kiwi's up, which might indicate weakness here. Pound is up, which might indicate weakness here. Aussie is up, which might indicate weakness here. And Euro down, which is messing all this up. Because so much of the market is Euro dollar or Euro yen that even though everything is up except the stupid, pathetic Euro, then it kind of makes these things look stronger than they really are. Maybe. I don't know. But I love this leg down. I'd like to see a lower low. Okay? But even if this is moderately strong, this is stronger. Even if this is moderately strong, this is stronger. Even if this is moderately strong, this is stronger. So if you've bought the CAD, the Kiwi, the Pound, the Aussie, you're probably having an aight day. Because your funding currency is probably yen, dollar, or Swiss franc, unless you're doing cross pairs. I hate crosses, by the way. I don't hate them, but I don't trade them because I'm a macro trader. So if you're a technical trader, a pure technician, you might be doing like Aussie, Euro, pound versus Euro, Kiwi versus Euro. But here's the thing. Basically, the only thing working is something with a Euro on it, assuming you're dumping the Euro. But I'm not a cross trader, and I'm not a cross-dresser. All right, cool. Let's dive a little further and see if we can learn something from our exotics. And what this would tell us is whether money is flowing across borders with, in this case, like, Rand is an emerging market play, and peso is really a macroeconomic activity play. Not really. It's kind of the same, but kind of different than the Rand. Okay, the Rand is definitely a commodity producer, but it's also definitely an emerging market play, which you're gathering mostly carry, right? So it's a carry trade. Peso, this is more of to me, a U.S. recovery play. So as U.S. economic activity increases because of increases in consumption and spending in the United States, American companies are just going to continue to ramp up their businesses. And many U.S. businesses work with Mexico. It's a major trading partner, right? Okay, major trading partner. So to me, this is really a dollar play, okay? Money flowing across to Mexico because of business activities, and that would be a good thing. So this is an entry, in fact. You can see this is a plausible entry with the outlook of heading down, okay? So on hourly, you could see the market has collapsed and went from bullish to no longer bullish. You have permission to engage if that's what you want to do, okay? 4 hour, we're still on top of the 21. Okay, so your shorter time frame, like your hour and stuff, you're assuming a drop to the 55 around 120, and then a lower high, lower low again. But if you're able to get short up here, which is a little dangerous, because remember I said wait for the market to be down and then sell rallies. I mean, that's the whole point. So we're not quite there yet looking at this area. But your argument might be like, hey, man, it's been falling, right? It's been falling forever. So this in of itself is the lower high, okay? And you can see right here, oops, I just updated. I have to readjust. You might see here, let me do it this way, okay? So the question is, if you're going to engage, do you wait for the breach here, or are you going to trade it like a double top, lower high, lower low? Like, are you going to trade the 1, 2, 3 is what I'm trying to get at. So you go back to this time frame, you zoom in a bit, and you say, okay, up, okay, and now maybe, right, or okay, that kind of thing. Your call. All this based on this being a role reversal from last month. Okay? You know what I'm talking about? So that's your alpha now. Do you engage or do you not engage? One way to do this again is to trap it and say this is a role reversal on the top. This is a role reversal on the smaller time frame. So another way of handling this is lower low, lower high. Could be a rabbit. Could be, right? Hey, thank you for all the emails, Maida. Appreciate it. And you're right. It was Arturo. Absolutely, for sure. Fantastic. Cool. And then, okay, so, right. Similar but different. Double top here. Okay. Notice that the pivots are a little different. So the sell zone is here. And this is the sell zone here. Okay. Okay. Sorry. Sorry. I got music in my ears. What can I say? All right. You see? Isn't that cool? So let's rotate out now and take a look at these yens. Oh, what? Wait, what? No. What? I hope you got the trade plan. Okay. Oh my God. Oh my God. Oh my God. Oh my God. I hope somebody caught this. Cool. Yes, it is my birthday, and thank you for that. I appreciate it. It's right. It's my annual haven't died yet day. So happy birthday. Thank you very much. Cool. Yeah, I got all your emails, including the one this morning, Maida. Awesome. Cheers, have a cigar. Enjoy a cigar. You know, I got too much to do today. Yeah, it would be nice. Nah, it's fine. All right. So anyways, I hope you caught this. Yo. Happy solar return. Cool. Now check it out. So I want to make a point here. Do you remember when we did all of this? And I was trying to explain, or I was trying to keep you calm. I was trying to keep you logical. And I asked many of you, do you think it's over? Do you think something fundamentally changed? Has the trend reversed? Is there a reason for it? Okay. Should we freak out? Is the sky falling? How many people remember that conversation? Probably 2 days ago. Right? I think it was about 2 days ago. How many people remember that conversation where I focused you on has everything changed or has nothing changed? Okay. And so if you were able to carry some of these trades off, you might be breaking even right now on your euro trade. It just didn't take off. Okay, that's the euro for you, waiting for the dollar. But you might have grabbed the Aussie, you might have grabbed the Kiwi, and you might have grabbed the pound. CAD, you never had the opportunity. So here's a thought. You had lots of opportunities. 2, every single one of those trades should be at break even. Well, what I say is -3, right? And 3 out of the 4 have probably worked. Meanwhile, the media is talking about everything is over. Like Janet Yellen said something yesterday, and quote unquote, the market freaked out. The stock market came down. Okay? Now, let me ask you something. Janet Yellen says something, Secretary of the Treasury, and the stock market declined. Do they have to be related? Yes, they both happened, but did one cause the other? By the way, thank you, Evelyn, for the ADP 742. Yeah, we knew it was going to be hot. Yeah, they do not have to be related. So, the way I heard it, the media said the stock market declined because of what Janet Yellen said. Okay? Now, if Janet Yellen said something that moved the market, it would be related to interest rates. It would be related to Fed policy. Remember, she doesn't work at the Fed anymore, but the market would have been, if the stock market crashed because of something Janet Yellen said, and that crash would be due to a rising interest rates. Let me ask you this now. If that is true, if the stock market crashed because Janet Yellen said something that intimated that interest rates would rise, would you assume you would also see the interest rate market freak out as well? How many people would say yes to that? If Janet Yellen said something about interest rates going up and the stock market crashed, then you'd see a reflection of interest rates go up in the interest rate market, which we call the bond market or the paper market, the short-term treasury market. Okay? Okay? It would make sense, right? Like the interest rate market would freak out, not just the stock market. But guess what? Nothing happened. Nothing happened. I would argue that the stock market was coming down anyways. Oh, right on, Barry. Thank you to you, Barry. Thank you to Maida. I appreciate that. Smoked a fat cigar in your name this weekend on a yacht in London? Oh, man. Doesn't sound too bad, eh, Barry? That's the best thing about having friends with yachts, because you'd never want to have your own yacht. The worst thing ever is to have your own yacht, but I appreciate that. Thank you. So, anyways, I hope this all came together. Yeah, that's right. Good point, Maida. Hey, when am I going to party in a yacht, right? In London, man. Yeah, that's right. All right. So anyways, just be careful about the media. Okay, just be careful about the media. I think the stock market coming down has to do with seasonality. I think the stock market was coming down before Janet Yellen said anything. I think the stock market was simply doing what the stock market do. So be very, 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 very careful when you listen to the media, right? Okay? Be very, very careful. This is why I want you to understand. Oh, wow, look at that. Heron sitting in my yard. Huh. Cool. We have goose babies everywhere. Yesterday there were 10 geese in the backyard and 4 geese in the front yard with 7 babies. So I'm like, wow, like we have over 20 geese in the yard. And also turtles have been coming up laying eggs all over my yard as well. So now I got herons hanging out too. Wow. All right. So there you go. So yen took off first. Thank you. Thank you. Okay. Oh, thank you, Raymond. Yeah, the wildlife park for sure. Huh? All right, so let's chickadee check it out. Okay, just another boring swing trade. Okay, once again, I was asking you, has anything changed? Has anything changed based on your understanding of global macroeconomics? Many people said no. Cool. There's our buy zone. Look at that to the pip, dude. Dude. Yeah. Dude. Okay, that's very cool. But here's the interesting thing. Then after that, up, down, buy. Up, down, buy. Up, down, buy. Up, down. Could be a buy. Could be a rabbit. Well, we got this in our way, but, there's always something. Okay? So really, you're asking yourself, should you be buying dips off the 21 if you're a bull? Okay? So another way of looking at that is do statistical analysis from this bottom over. Okay? And you can say, well, there's some up. There's some potential up. Coolio. Peso, this is the one I'm waiting for. Ooh, it just popped too. Nice. Nice. This looks pretty nice. Nice. That's nice. Very cool. So I got her trapped here like a hitchhiker in my basement. Okay. Waiting for the new op 2026. Okay. Okay, that's cool. I got that to be happy about. Here we got a roll reversal. I don't know. I did a zone here, but if I grab that actual wick, oh, pretty cool. If we go out to daily, you see, right? We're riding a daily 5. Not really anything there. Not anything really there. So it's just sort of a resumption. So we're hoping that this fresh Friday cross on the 4-hour produces some downward motion. This is an OOP trade. No, I didn't stutter. This is an OOP trade, and that puts us down to $1.20 and then a big old bounce. Okay, a big old bounce. Okay. Greg says, you're so right about the media. I just completely turned off the nightly news. Yeah. Yeah, sometimes I have the TV on, like obviously you can see behind me. I don't generally watch it. Everyone, to me, it's eye candy. I feel lonely a lot being a trader. And then in the mornings in particular, I just like to have voices around, and I like to hear about, oh, the treasury market has done this, and oh, this is this other thing, and oh, your earnings came out, and this is what happened. I just kind of like it, like it's noise. It's trading related. But I don't actually pay attention, but I just like the conversation, right? But the last thing I would do is listen to a journalist, right? A journalist major? You went to college and got a 4-year degree in journalism? Anyways. If like podcasts, like, let's see, I got some podcasts I can tell you about. Let's see, I have to go to the P podcast. I listen to Numbers by Barron's, Masters in Business by Bloomberg, and I thought they would be in this. They're not. I get so Goldman Sachs sends out clients research, and part of that actually is a podcast. But I guess because it's private, it doesn't show up in my podcast, my Google podcast, so it's not publicly distributed. But sometimes I read that, because what they'll do is, like, they'll interview multiple Goldman Sachs analysts about, like, the retail market, right? Retail sales and all that kind of stuff. And sometimes I find that interesting. Just trying to get this. My glass is clean. So that's all. So not a lot. Taking a look at AUSSE. This is one of our trade plans from yesterday. Cool. So it looks like I'm up 30 pips or something. No. So that's good. You can see it's a weekly M2 off of a monthly central. So if it drops lower, it means I'll be counter trending this by Friday. But if it does head lower, I'm not in it anymore. So yeah, it's a trade. Whatever. What can I say? I think the timing's all right. I think you get the idea of the plan, right? So you kick it over here, baby pop, right? So anyways, we hit this, which to me starts, let's do it a different color. This starts somebody's monthly plan, right? That starts the monthly plan. And so based on that monthly plan, we are going to monthly wait for it. We're going to monthly R2. So somebody entered a trade here, and I think I understand what they're going for. I understand what's in their mind, but I also know that the same thing could apply lower, so I'm not ready to bet the farm on this sucker. Okay. So that's just one entry. Now, the second entry is someone doing this for a weekly. So this predicts that. So on the weekly, if I get this right, by the end of Friday, we're going to be up at 78. I'm long at 77, 100 lousy pips. That's a pretty boring, very mediocre, unexciting swing trade, right? You're like, so I don't know if that's going to happen too. It's very unexciting. Non-farm payrolls could kill all of this. So I'm just trying to enter a trade. So I'm like, well, on this entry now is based on the trade started here. Okay. Then what? Then I drop into the smaller time frame and I see the up, right? Up, down, buy. Gone. Long and gone, Bubba. That's all I did. Any questions about that? Just trying to get in. Okay. Can you see it now? Okay. We knew this on Monday, by the way. Sunday, I should say. So how do you get in? Up, 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 down, down, buy. Okay. Now right now we're up here, and I'm like, well, let's do this in reverse. Where would a bear sell? Well, we know this is a sell zone. And do we have evidence of bears being there? Remember, a bull would not take profit at these prices. If a bull bought this and took profit here, they don't know what they're doing. It's probably like a day trade or something, right? It has nothing to do with a real swing trade. It has nothing to do with a position trade. There's no macro behind it. There's no, it was just a little day trade. Great. So we just know that there's actually selling here, not profit taking. So if somebody sold here, okay, where's their next entry short? Well, around the present price, okay, we could be more specific. How about the weekly central pivot? Okay, and they're targeting down here. So a bear's going to enter here if they exist. Okay, because they're going to sell the lower low, lower high off the central. So if there's enough of them, that's what they will do. So if they want to attempt that, I don't want to be in their way. Okay? So if they do it, that's fine. I'm in an okay position because if it comes all the way down, knocks me out, and then continues up, well, I can try again. I'm just not willing to lose money to try, right? But if I'm right, it's going to do this. You ready? And then what? I don't do anything. See, I'm not getting paid by the hour, right? So anyway, it's a reasonably okay trade, and there's a reasonable outcome. A reasonable, plausible outcome. Understand, if you recall yesterday's conversation, or maybe it was 2 days ago, I don't remember. I said, really, it's probably somewhere between May 15 and May 31st, when the dollar actually accelerates its decline. So I'm early. I'm not that excited yet. I understand seasonality. I'm like, yeah, I'll try because it's there. But there's nothing good about it. So imagine now you're a professional athlete and you play 180 games a year. It's a shot on net. It's not the one to win the game. It's not the one to win the championship and you get to hold a trophy above your head and you get to say, I'm going to Disney World, and sponsors are calling you, your cell phone's ringing, it's Nike, it's Coca-Cola, You're like, oh my God, this is amazing. I made that shot. No, it's not that kind of shot. This is just game number 87. It's the first period, 12 minutes into the game. And you got the ball, you got the puck, you got whatever, and you have a shot. You're like, meaningless, but legit. Okay. Wayne says, you listen to hardcore stuff? No CNBC and Bloomberg or Fox? I don't know what there would be besides any of that. Fox is interesting. So I don't listen to Fox News, but I was on Fox Business News twice. And the interesting thing about that is they trapped me, and they were going to make me basically look bad. Can you imagine that, being on live TV? And then the goal of the interview is to make you look bad. And what they wanted me to say is that Forex is crazy and wild and out of control, and for, retail Forex traders that just want to gamble. Kind of like how the media treats cryptocurrencies now, right? Okay? And anyways, at the end, because I'm sitting there and I have an earpiece on, right? And I can hear the producers in my earpiece, as well as being asked the interview questions. So at the end, they fade the black and they go to commercial break, and they disconnect, right, the interviewer. And I still hear the producer, and he's like, "You got him! You got him!" And I wish the world had that, but I have that in my memory. It'll have to go in my memoirs or something. But they literally, the guy cheered at the end. He's like, "You got him. Good job, Wayne. You got him." But how about that, right? How about that? Again, think of it. You're on live television, and they're trapping you to look bad. Wow, huh? Man, could happen. Could happen to you. Well, I think it's just on, isn't it just on YouTube? All right. Let's bring it up. I think it's just YouTube. YouTube.com/FX Bootcamp, of course. Sort by what, views maybe? Yeah, this is great. All right, I'll play it.
Foreign currency. Joining us again from Atlanta with some tips on trading and foreign
I
money
don't
is
hear it.
Wayne McDonald. He's chief currency coach.
Oh, here we go. Let's do it again.
U.S. markets is driving some investors to foreign currency. Joining us again from Atlanta with some tips on trading and foreign money is Wayne McDonald. He's chief currency coach at Forex's FX Boot Camp. Wayne, good to see you. Thanks for coming back. Last time we kind of shortchanged you, so we're glad you could make it back.
What a baby.
Details of what the boot camp is all about first.
Well, first of all, FX Bootcamp is an organization that teaches people how to trade currencies. But what makes
look at
FX Bootcamp
look at the stock market, 7,900 on the Dow.
Moving. So sure, we teach you technical and fundamental analysis, but most importantly, we teach you how to be a trader by holding your hand perhaps as much as 12 hours a day and explaining what's happening in real time, helping you set up your trades pip by pip, candle by candle.
You know, I was a little bit skeptical at first, but the more I looked into it, because it's such a volatile market.
Yeah, it's a sevenfold tie, Pat Green.
Currency. It's where
pure
a lot
silk.
of the real high rollers are. But you are very conservative in currency trading, putting in stop loss orders every chance you get, right?
That is absolutely correct. You know, Forex is very, very risky, but, you know, honestly, whether you're trading in commodities or equities or in currencies, risk is always going to be inherent. And what you do to manage that risk is roll up your sleeves and do the hard work. So, for example, let's say someone wanted to pick a stock. Well, it's well known that you need to research the company's product and service. You need to get to know the management team, and you have to have a reasonable comfort that the company is going to produce profits in the near future. And if you're right, hopefully you make money. But sometimes, even when your analysis is right, you still lose. But you know, Forex is not that different. Right. You still need to gather your intelligence, and you need to formulate a strategy. Okay. Most importantly, you need to have the discipline to carry out that
Wayne,
plan.
One thing, less people think that it's unexciting. You do rolling stops, right? You train people in how to do rolling stops. Explain what that is, because this is where some real fast action happens.
You're right. Currencies can move up and down minute by minute, especially with news. You know, ISM really moved the market, and non-farm payrolls coming up will move the market. When you place a trade, what you do is you put a stop loss that's not that far away, so you know that if you are wrong, and any variable around the world can make you wrong, that your potential loss really shouldn't be that big of a deal.
But we're talking, in terms of trades and time, we're talking about a 5-minute turnaround here. If you put it down with a stop loss on it, 5 minutes later, you've made 10 basis points, whatever it is, and immediately you turned it around because of that stop loss. So these are quick trades.
Sometimes that's true, and when news comes out like ISM today, I held a trade for about 17 minutes, so that's not that big of a deal. But the beauty about Forex is that it trends so well. So, for example, the best place to put your money right now anywhere in the world is in the U.S. dollar, and that U.S. dollar has been strong for 8 or 9 months. So you don't have to trade every single minute or every single hour.
Wayne McDonald.
Go with the long-term trend.
It's very exciting, but there are ways to play it safe as well. It's great stuff. Thank you, Wayne.
See?
Good to have you back. Appreciate it. Well, searching for the answer to business success.
So anyways, the guy's cheering. Yeah. Because he was trying to say it's wild and crazy and it's not for normal, average people, and that you should avoid it and all that kind of stuff. So it's pretty funny. So, a day in the life, huh? Cool. Oh, look at this. Oh, no, I'm going to get stopped out with my rolling stop. Stupid euro. Gee whiz. Gee whiz. I think I'm going to lose 15 pips on this trade. No! Yeah. Yeah, looks like my stop's about, 85? 190. It's even higher than that, right? Yeah, it's 15 pips away. Yeah, so we'll see if I survive that one. If you want, you can drop into a fiver. Oh, it's trying. It's trying, baby. Come on, baby. Cool. Yeah, who was that young guy, right? Yeah. Anyway, so the other ones are working, so it's got a chance. Oh, look at that. Oh, my peso. I'm going to miss it. Anyways. So we did that. We did that. I think I skipped commodities, so let's go with the commodities. Oh, look. That's amazing. Oil is up. Yeah, that's what analysis does, guys. Okay? Just an incredibly boring trade every single day. I ask you, where's oil going to be? Do you think it's going down to 34? Or do you think it's going to go to 84? Which one? That kind of stuff. And sure enough, we're rising. We've lost supply. Okay? Over here, in this period, and by the way, I think I did this analysis on Monday, so I apologize for repeating. But in this period, we thought we lost 800,000 barrels a day. Turns out yesterday or the day before, we found out it's not true. We lost 1.2 million barrels a day. We produced less than what we thought, by 50% less. So cut supply price goes up, boring. Okay, just boring. So I begged you to do the work, to do the research, so you have the conviction for these setups and these trades and your analysis and your outlook. You either did it or you didn't. Okay? I don't know. Yeah. So anyways, cool. Great. Cool. Fine. Great. Good. So you either did it or you didn't do it. doesn't really matter to me anymore. You either did it or you didn't. Okay, cool. Check it out. Weekly swing, counter trend. What did I say yesterday? Well, here's Monday's trade. There's the target. And then on Tuesday, I'm like, this sets up a counter trend trade to the central pivot. How many people can confirm that? Okay. How many people can confirm the M2 to M4, then back to the central pivot point? Daniel, if you lose power for 2 or 3 days and you don't have a cell phone, you should have a virtual server. So your MetaTrader is sitting on a virtual server. So it runs with you for days and you can control it. You can log in somewhere. So you can run to a Starbucks. You can run to an internet cafe if they still have them. Right? But anyways. All right. So yes, confirmed. In fact, you already know this. If you've gone through my swing trading course, that's just one of the courses at FX Bootcamp. If you've gone through the course, this is very predictable. You know exactly what to do here, and you also know that it's likely to come back here. So you know the buy, the take profit, the counter trend sell if that's part of your alpha, and then maybe a resumption. Now, I don't know about the resumption, but if you're a trend trader, you just assume the trend's going to continue. That's why you're a trend trader. Okay? So this entry, obvious. Exit, obvious. Retracement to the central, obvious. And now, probably going to climb higher, but the weekly trade plan is now dead. So we have to go back to what I did a week or two ago, which is to say, we're there. So now we got to put all this together. This was obvious. This was obvious. This is obvious. And now we're working our way here. Is it going to be a straight shot? No, probably not. But, we probably get something like this. Cool. Fine. Great. Greg says he never has to worry about power anymore. Yeah, especially I've made trades at 35,000 feet above the earth, which is amazing, right? Okay. Wayne, you go to fxbootcamp.com, you join. And then it says, hey, do you want to upgrade your account to our live group? It's $99 a month. That's it. Pretty simple. So there's day trading, there's swing trading, there's fundamentals, there's taking control, there's MetaTrader. I can't even remember. There's a bunch of stuff. We meet on a regular basis on Thursdays to plan out trades for Monday. Okay? Simple enough, man. USD Swiss franc. No, I will not, because those are both funding currencies. But let me make a point on that. Thank you for the question, though. Okay, let's go here. Here we go. Okay, so let's do this. Okay, Blaze? Swissy is generally up. Dollar is generally up. Why the heck would I want to trade them against each other? Yeah, it's swing trading, Wayne, so that's all you need. Okay? As a swing trader, you probably only work a couple of hours a week. Okay? And it's not like you have to be, right? It's not like scalping where you're locked to a computer. So, yeah, I mean, right? You work a couple hours a week. You make a couple hundred pips per trade. Nothing too complicated. But anyways, going all the way back to Blaze. Okay? I would not want to look at that trade. Number one, okay? Number one, they're both funding currencies. I would, as a macro trend trader, I would never trade them against each other. Okay? You can, of course, but that's relative strength. Okay? But I bet you no matter what, when you even find a good trade against USD Swiss franc, I could probably find a better trade. Okay? So I think at best it would be a mediocre currency pair to trade. But because I'm a macro trend trader, right? Okay. And number two, I don't even know what number two is anymore. Sorry. I don't even know. They're both funding currencies. So, like, what more do I need then? I'd just say correlation, maybe. Okay. They're just highly correlated because they're both funding currencies. So I can't even think of the next one. I had a number two, but I don't remember what it is anymore. Okay. So with quick analysis here, relative strength would say you could buy the Aussie versus the euro. So if you're going to be a relative strength trader like that, you might look at, I don't know, right? You might say Euro's weak, so you might want to sell Euro Kiwi, Euro Swissy, Euro CAD, Euro Rand, Euro Aussie, Euro Pound, Euro Noki, and Euro Yen. And what you'll see here is Noki is weak. So now you can isolate Norwegian krone and chop that up. Okay? Okay? You see? That's what relative strength is about. So when I show you something like this, you're like, oh man, I'm going to sell the euro. Done. Okay? So you go to scan euro and you set them all up. Okay? Meanwhile, you're staring at probably don't even have it. See, I don't even have it. I don't even have it. I guess I'd probably have it here. Yeah. Okay, so check it out, Blaz. You want to trade this, and you probably want me to say, well, this looks like it's up, but then we have resistance, but maybe this will be support. You know what I see? Right? Nothing. Why would you be doing this when you have other things crashing and falling off the face of the earth, right? Good morning, Brian. Thank you very much. You're up early this morning, huh? What time is it for you? Did it just hit 4 a.m.? Okay. Okay, do pound. Well, I have this as a buy zone. Yeah, it's a good idea. I used to do a lot of my Harvard classes like that. You could probably do it this way. Hang on. The other one will be important later. Yeah, no, it's nice. See, to me, it doesn't matter. It's just trading, guys. Right? You really have to understand, I don't use my tools like this template here to make decisions. So I could use this, that, the other thing. It doesn't matter. I'm buying dips. So what's the big deal? You can use any indicator you want to tell you that it's a dip. Okay? Okay? Yeah, it's part of the MetaTrader Complete Toolkit. So it's in there. You would know the loon. Okay. Probably want to take some noise out there. Okay. Okay. So let me redraw this actually. Let me get rid of this thing. Go to a higher time frame. Even higher maybe. Okay, let me get rid of this. And I guess we don't need that. I want to make a oops, I deleted the moving average. All right, I want to make a point here, especially on price action. Wait, I deleted that. Oh, I guess I didn't. Gee whiz. Rectangle properties, delete. Gee whiz. All right, so let's go into here. What's going on? Nothing's right. I'm torn. You're a little late. I'm already bored. All right. This is the psychological level. Okay. So how does the price action work? Okay. So at FX Bootcamp, if you join, you will learn price action in the price action course. So yes, there's day trading, there's swing trading, there's fundamentals, there's price action, there's a whole bunch of stuff. So one of them is price action. And what you'll learn in that is that when you breach in a bullish trend, so you have to be a bull first, when you breach a psych level, it's going to come back and test it. And now, ideally, resistance has become support. Okay? Fantastic says pound dollar is going to go up 1,000 pips. Well, I don't know nothing about that. I don't know nothing about that, but if your stop's at break even, right? Do what you got to do, boy. So if I were playing this on a day trade or a market open type trade, that's all that's going on for me in my mind is like, it's either going to go up from 39 or it ain't. Okay. That's that. It's up from here or it ain't up from here. Okay. All right. I don't think I did crypto. And since I'm starting my cryptocurrency course at MetaTraders, not MetaTraders, sorry, at MIT. So think about it this way. I'm paying like $3,000 to take a course at MIT on cryptocurrency. FX Bootcamp is less than $400. It's a joke. It's so affordable. Harvard would charge more than $3,000 for a course. One class. Textbooks for a Harvard class cost more than FX Bootcamp. The price is a joke, but I will raise the price. So join now or whatever. Whatever. Don't join now. Learn or do not learn. There is no try. Okay. So anyways, it's just funny. It's too affordable. Anyways. So here we are off of our buy zone for Biddy. Okay. Traders would be now jamming stops. Okay. You got your inverse head and shoulders. Probably measuring it this way. Well, let's not do it. Let's use a different tool. Okay. Let's measure this up like that. Okay. Thanks, Freed. You're good people too. Okay. So, yeah. Okay. There you go. We could do this differently if you want. Delete. Insert indicators, custom price action pivot points. What? Pivot points not based on market, but price action. Okay. Oh my God. I'm going to actually change this to measure a smaller time frame. The reason for that is we're measuring a change in trend, right? So we want to measure closer to home. Okay. Well, you can do it like this over the last day. How about that? Over the last 24 hours, what's going on? Nothing's right, I'm torn. You're a little late, I'm already bored. Yeah, check that out, Bubba. Oh my God. Okay. So, how does this help? Okay. The number one most important thing is this is your monthly buy zone. You knew it yesterday, the day before that, and the day before that. And you even, if you're using my tools, you even knew it last week. Last week. You knew this 10 days ago. So if you don't know that, then everything else is going to be late and behind. You're not using any predictive, forward guidance, technical analysis. You're not losing any leading indicators, so you're always looking in the past. If you didn't know this a week ago, then you didn't see this coming and you were just blindsided. And you're going to say, my broker manipulates me. Yeah, it's not your fault, bro. Okay? Anyways, check that out. That's the number one most important thing. That you think you're going to get a reversal. So you get a touch and it bounces directly off of it. For 1 hour, 2 hour, 3 hour, 4 hour, for 5 hours. Okay. Then we go through the next market open. We hit it again. Pachow, bullish engulfing candle, up and up and up and up, okay, to a higher high. So now you could set up a 1, 2, 3, or if you would rather, inverse head and shoulders. Okay, which means here. Either way, whether it's a 1, 2, 3, or an inverse head and shoulders, you're looking for a higher low, probably off the left shoulder. Oh, stop it. Higher high, higher low, higher high, higher low. Okay? And what we're using now is the standard deviation from the mean when M is greater than 0. So we're kind of looking forward here and say we're climbing a hill, brah. Up, 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 down, down, buy. Up, 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 down, down, buy. So right now we got bullish price action on Bitcoin based on a monthly buy zone that we had a week ago. Okay? So now the thing is, since we've printed this out, right? And we got this going, what's the target? Okay? Well, I covered this last week, but let's do a refresher. Okay? $62,406.82.5. Isn't that neat? Thank you for being part of the community. Thank you for clicking the thumbs up button. Thank you for wishing me a happy birthday. Thank you for the super chats. Maida and Barry, thank you very much. I'm going to buy a bottle of wine in your honor. Okay. I believe I have one in sight, if you want to know. Silverado Mertage 2017. So that's what I'm going to do with the money, guys. Thank you very much. Okay. And it works out almost perfectly because I think it's typically about a $50 bottle, but I can pick it up for significantly less than 50. So I'm going to put it in the cellar and let it sit. So I won't buy cigars with it. I'll pop it in the wine cellar. So thank you very much. Freed says, we all get a yellow Lambo. No, I wouldn't want a yellow Lambo. No. So I'll see you guys tomorrow. If you join FX Bootcamp, I will see you tomorrow afternoon for our swing trading group meeting as well. Please visit tradersway.com and open up a demo account. Okay. So I guess we'll just leave it at that. Peace on earth. May the pips be with you. May your profits be above average. Boom. Thank you for everything that you do. I will see you tomorrow. May the pips be with you.